Hello there, my friends. Chris Marcus here with you for Arcadia Economics on Monday, August 3rd. Amazing. We're already in August now. And certainly, for anyone else looking forward to the September silver deliveries, only a couple weeks away now. So it should be a lot of fun. If you can see there, I am again wearing my First Majestic silver shirt on First Majestic Monday here in Arcadia headquarters. And a few bits of news. We'll dig into First Majestic a little bit today. Here is the First Majestic on my Market Chameleon options screener. And by the time you're watching this tonight, I will have completed an silver and options trading webinar with Market Chameleon. We'll be going through the First Majestic board, which you can see down here, some of the options, which lately are pretty darn expensive because they sure get jacked up when silver starts moving. Although I am guessing came in quite a bit today. Actually, the inverse of how the skew and option volatility works to many typical stocks. But in case you were not notified of that, by the way, if you go to arcadiaeconomics.com, there is the opt-in back on our website now. So if you'd like to get all these videos delivered straight to your inbox each day, you can just go and click there. And anyway, tonight's episode is sponsored by First Majestic, one of the purest primary silver miners. And certainly if you're expecting a continuation of the silver rally like I am, then First Majestic is a stock that is quite positioned to do well in that environment. As you can see, they've rallied quite a bit. Let's take a look at the last month here. So here's in the last 2 weeks where silver broke 20, and you can see First Majestic was sitting around 10.5, currently up to $13, and that's a bit off the highs. You see 14.25 there, 14.05. So and we will get into the theatrics of the silver price on the open in Sunday night, Monday morning in the Far East. I know a lot of you are watching that, having some fun conversations on Twitter as these markets open. Also with First Majestic, it looks like earnings is this week. The 5th is not confirmed. I saw an estimate of the 6th as well, but here Earnings Whisperer, they're saying the 6th. So either case will be interesting to see. A lot of the earnings that will be reported, I don't think will be including the move up to and beyond 20, since that happened quite recently. Although there had been the move in the silver price, at least a little bit higher prior to that. So we'll get an interesting indication of how things are looking. But certainly with the prices higher, especially some of the gold companies, I think we'll see some nice numbers coming up. But to dig into today's video, where, when you look at the list of signs, at least that I've looked at for the past decade, thinking, all right, before something unravels in the silver market and we see a real move to the upside, what are the things that you might expect? Certainly demand for physical would be, that was the primary thing. And, that silver would probably stay pretty low until people, or not even just that it would stay low, but what would force the resolution of all of this paper leverage, I have always felt would be when enough people come in demanding their metal. That's been happening, and we've talked about that quite a bit. We'll look at the deliveries today as well, especially with gold starting off last Friday for the August cycle. But the other thing is that if you ever reached a point where, I don't know that this even really happened in 2011 or 1980, but where the banks that are short start to run for the exits, and amazing developments in the Commitment of Traders report that was released on Friday. I was reading Ted Butler's column, who does such a fantastic job for years of going through those reports. And one of the things that he pointed out that is really interesting here, see, someone was asking about this earlier today, where why do the banks care if the price goes up or down? Well, if you can, especially if you can get really short and then drop the price and then buy it back lower and wash, rinse, and repeat, as they say, which is really what has been happening for a long time. And I got a great chart coming that puts that in perspective. But the interesting thing is that typically, as the price would go up, the banks would get more short, and then it would eventually plummet. So what's interesting is that you see here the price goes up, quite a spike there, and the blue bars, which are the commercial positions, and here it's in negative territory, meaning they're short, was about 60,000 contracts. And then we'll have exact numbers in a second, but let's say 42-ish. So again, the theme being that normally when the banks are shorting to keep the price lower, this is when, on a spike like that, you would have seen the short position grow substantially. Instead, it was reduced, meaning that the banks bought their position back at the higher price, which I don't remember that happening before. Ted was saying that that really hasn't happened before. And certainly, well, there's no official press release on it for the banks. It was interesting. Ted thought, well, that's an interpretation that they think the price is going higher, because why else would they be buying back their short at the higher price, which makes enough sense to me. And I just try to be careful how I phrase these things. It's like, we don't know exactly what JP Morgan or any of these banks are doing, but certainly that is an encouraging clue, because if the banks aren't going to be short the metal, then who is? And certainly in terms of if you have the short position reduced, again, that's what we talked so much about in the book. And the signs continue to emerge. Not just a sign here. Here, some of it has manifested and played out. Whether that continues, we will see. Similar impact in the gold chart. There again, you see as the price spiked up on this last week, short position reduced. So, and then you look at what is happening on COMEX, which, we'll get back to the COMEX, but this one is special that I just think you'll love seeing. So this is the red here. You have the commercials are the red line. And what you can see here is that, so basically as this goes down, that means the banks are getting more short. And you can see this pattern where here they get really short, and there the price comes down, and they're getting less short as they're buying contracts back. So then they get a little bit short there, and it comes down a little bit. And here it gets pretty short, and you see that nice cascade. It's like clockwork. Then they get really short here, and you see that. Banks start. Now, this is what was interesting, because I don't know why it took me so long to clue and actually trade this. I bought some options around here. Actually, maybe it was here, because I remember last year I bought them and then the price got clobbered. I think maybe I bought some more on one of my, every once in a while we get the timing right on these. And it was interesting because then you get to September when the price hits $19. And really, well, actually prior to that, because it felt like the pattern broke for a little bit, because you see how short they got here, and instead the price kept going higher. Did come down from 19 and actually came back down to 17 quite a bit, although that position stayed quite short for a while. And boy, was the energy released out of that one in a big way back in March. But again, so, I know some people call the manipulation conspiracy theory, which is, I think is still kind of bizarre at this point. I could understand before perhaps Bart Chilton's interview or the Department of Justice guilty confessions they received. by the way, Andrew McGuire, I believe, is coming on this week. So will be great to ask him about that. So many questions about that in the face of what's going on. But anyway, I mean, this is about as clear evidence as, as you could want. And again, I wish I'd started trading that 5 or 8 years ago. But you can see the pattern, and you can see what people are talking about and why I think that is rather important. So let's take a look back to 2008, see if we can, where is 2008 begin? So there, interesting. Yep, right. They're pretty short, right when that thing plummeted down. Right around, there we go. There's in March, where you have the Bear Stearns JP Morgan takeover deal. Let's see if I can, and you see the price came down. That was when it started declining from 21 to 9, as JP Morgan was making their short position larger, which you could see down there. And then by the end of the year, when the price hits its bottom, buying it back. So CFTC never found any evidence of that. I would love to discuss it with them. Or another thing I would love to discuss with the CFTC and the Department of Justice. I'm not saying that I necessarily, think that will ever happen, but I know a lot of people were watching, and we were following along together on Twitter yesterday. I just was feeling excited about that opening. I actually had a dream Saturday night that there was going to be a spike on the open. And I woke up to a message from Patrick Vieira of Silver Bullion TV, who was inviting me onto his show last night, which was quite a good time. And in this case, we actually did have the spike, got up to almost $25. I mean, I'm sure a lot of you were watching it on the open. And then wham, as we've seen so many times before, and again, I'm having traded options professionally for a, professional institutional company for 7 years. I mean, I've never seen anything else like this. I mean, where we close in 24.47 and it opened, opened 24.47. So if the thing had just grinded down 14 cents, okay, that's fine and it seems normal. But just to see this, and then, I mean, keep in mind, these aren't small moves. This is, that's about 40 cents, then up quarter, and then you see a lot of volatility there. I would say it doesn't seem natural to me. You can think what makes sense to you. Similar pattern again in the gold market, and just a lot of volatility. Why would you see so much volatility? Well, maybe there's a lot of interest and a lot of leverage, and then typically those are a good combination to ignite something like that. Another factor driving that is the deliveries. 32,000 contracts posted for delivery on the first notice day. Another 2,000 contracts there today. In silver, the non-delivery month, not too much, although, another 219 contracts posted today, up to 694 on the month. We will see what happens. Interesting note in the SLV and silver ETF holdings, actually had an 8 million, almost 8 million ounce withdrawal today, which was kind of unusual because looking back, this is, I guess that's the 6-month chart. If we look back a year, this is the biggest in a year, biggest in 2 years. Let's try the 5-year. All right, you can see some bigger ones back in 2016. So again, that's just one day. What does that mean? I'm not going to claim to know the answer to that, but we will keep an eye on it, which of course is another great reason to hit the subscribe button and the notification bell. See, I'm getting smooth at working that in there. Yeah, or as I can't steal James Anderson's smash it, although I do love saying that. And I smashed the share button. I was fortunate to be in the live chat of one of his great videos on Friday. Another great channel. And James is coming on Wednesday this week. I'm not sure which night it will air because we have quite a busy schedule. Rain of Silver also coming on. But anyway, James will be on. And again, you can see this time they took some metal out of the trust. So we'll keep an eye on that. This was just a headline that always seems bizarre to me. House Chairman issues subpoena and probe of U.S. arms sales to Saudi Arabia. It just always seems so bizarre when I see these stories of the U.S. government doing some gun deal. And because it's the government, everyone looks at it like, oh, okay, well, I guess that's legal and part of it. But why does our government running guns to other countries, and then, you know, when things go bad and guns end up in the hands of groups that, you know, the government says they're the boogeyman, and where do these weapons come from? And here you go. So you can read, there's Mike Pompeo. I'm not a particularly large fan. I mean, I try to keep things positive. I think you know that. And I mean, I just don't know how do you trust anything that any of these guys say just after the track record of, you know, I'm wondering if we're almost due for another Syria used chemical weapons on their people, which I've heard from geopolitical analysts is about the most far-fetched thing to be possibly true, just when you look at the dynamics of that situation. And then I've always found it interesting, again, they always tell us that they have this ironclad evidence, which going back to when Obama did that for the first time in 2014, and I've never seen the evidence. I don't know anybody else who has. So hopefully this is the kind of stuff that will come to an end once the thing with the metals and the dollar is resolved. I do really honestly believe there's a lot of good that can come on the other side of this. You know, it's sad to me. I'm driving through downtown Denver, a city where supposedly the economy is booming and tons of people are moving to. And especially since COVID, there's a tent city growing downtown and even now in residential areas. And it just, then when you see and maybe that's why I care as much about all this as I do, where, all right, silver, you know, and it's great. And I hope we all make money, yet to the degree if there's one thing I could do on my time on the earth and have some impact, where, I mean, you see people struggling. There's your inflation, where government and banks eating over 99% of the dollar. I mean, and that's just marked to the current metals prices, let alone a true fair value of gold. I mean, all this inflation, all of these, you know, missiles and bombs and money wasted, and you know, so I don't know. I know you'll probably hear a lot of different things about, and I know there are people who say, well, would we want to live in a world where silver is $50 or $100? You know, silver did hit $50 in 2011. I don't think anybody knew about it unless you were following it. Now I understand once the dollar really starts to fracture, I think there could be, I don't know what the adjustment will be like, but keep in mind, like, this idea that no one's going to have food, and sure, I guess it's possible, although I keep thinking how we did just have a new level of whatever you call corona, and still through all that, while there was a bunch of folks who wanted to corner the toilet paper market at Costco, I'm not saying it's the exact same comp and doesn't guarantee anything about the future yet. You know, I think things have changed and aren't easy for a lot of people right now, but I guess just as I get a little bit older and study more the nature of human instinct, I think we figure these things out. And I like to think on the other side of the dollar, life will be a bit easier for people. So anyway, wrapping up here, we see silver stocks a bit mixed on the day. Big day for Alexco and also Dolly Varden, who you saw back on the show a couple months ago. We talked with Sean of Dolly Varden. Been meaning to check in with them. Hopefully they'll be at Silverfest September 12th and 13th. And I think we'll have something on the website, hopefully this week. Just about done mapping out the details, and a lot of people have sounded like they're really excited about it, which is nice. And I think we're going to have a great time. Lastly, one final note about First Majestic. You may have heard of this before, about a large short position on First Majestic. And I was taking a look at that today, and here you see 19.92%, which is pretty big. So similar to how you can have, that's someone shorting it, someone making a bet that it goes down, which means if it goes up, they lose money on that, similar to the dynamics with what's going on with silver, the commodity. So kind of like a short squeeze topped on top of another short squeeze. And certainly compared to the 2016 rally, First Majestic hasn't hit, there where silver hit 20, First Majestic got up to 18. So now we're at about 24 and it's 13. I wonder if that may have something to do with it. I'm going to start keeping a closer eye on it. And, but I maintain my belief we're going to see we've seen big moves. I mean, a lot of these stocks, I don't know if I would say they've doubled the silver stocks. I mean, yeah, if you measure from when silver was down at $12, but I mean, that was kind of a bit of an anomaly. And, as compared to, let us take a look since we got our chart right here. So last year in, come on, 1 year chart. Yeah. You see here in September when silver got up to 19, First Majestic was 11.28. Then in January, finally, right after I sold my January 11 strike calls, it rallied to 12.41. And so what was the price of silver back in January? It was probably 17 or 18 bucks by then. And now you have silver at 25 and First Majestic 15 cents higher. So yeah, if you measure from down here, it more than doubled. But I would say perhaps a better comp would be to, let's actually take a look. Let's look it up. Let's not guess. Apologize for my inherent laziness on such matters, but we will pull up let's get the 2019 and 2020 charts here. Error request, come on now. We'll try this one. Error request. Well, I guess Kitco is not in a good mood here today. Silver chart. We'll try Bullion Vault and see on the 1 year chart. So here we have at the end of the year, silver right around $18. So that's interesting. So when silver was 18 bucks at the end of the year, First Majestic got up to 12.41. Now silver is at 24.32, let's call it. And First Majestic's just up 50 cents. So again, this is a very crude, rudimentary analysis. Obviously, there's a lot of other factors involved. They've had some production shut down this year. So I'm highly simplifying this. But we'll dig into it more. I've actually been doing a lot of research on First Majestic to get a better handle on the story, which we will report here because, again, I'm proud to have them as a sponsor. A lot of respect for Keith Neumeyer, who runs First Majestic. You'll notice he was the only mining executive involved in the big silver short book. So with that said, going to wrap up for today, although coming your way now is a last interview we had with Keith. And if you haven't seen that, or if you have seen it, watch it again And thank you as always for being here. And here you go.